Spot Bitcoin ETFs will likely launch by January 10th, and that will make it a lot easier for non-native crypto investors to invest in Bitcoin. A Spot Bitcoin ETF is a traditional investment vehicle that allows an investor to get exposure to the price of Bitcoin without having to buy and safekeep actual Bitcoins, which can easily get lost or stolen. Investors in a Spot Bitcoin ETF own a share of the actual cryptocurrency without having to store it themselves, and the ETF's value is directly correlated with the current price of Bitcoin in the market. All that's currently available in the US are Bitcoin futures ETFs, which are more complicated since they involve buying and selling contracts that promise to deliver a predetermined amount of Bitcoin at a certain price and date. They also track the price of Bitcoin less faithfully than the spot, ultimately costing investors more in the long term. ETFs, unlike normal spot Bitcoin, also have the advantage of being investments that can easily be purchased for tax-advantaged accounts such as 401ks or IRAs. Why is this a big deal? A Bitcoin ETF would pull in a wider crowd of investors, even the customers of big institutional players who've been hesitant about directly investing in cryptocurrencies due to regulatory concerns, and financial advisors who control much of the wealth invested in the US today and are very familiar with ETFs could finally offer them to their clients to gain some exposure to crypto. This move would give cryptocurrency markets an extra layer of legitimacy and supervision. It might even help pave the way for clearer regulations and wider acceptance of cryptocurrencies. Purchasers of ETFs would find it simpler technically than buying Bitcoin directly. No need to stress about managing wallets and keeping private keys safe. It's a user-friendly and familiar way to invest in Bitcoin. When spot Bitcoin ETFs are introduced, it will signal to everyday investors that the cryptocurrency market has reached a level of maturity suitable for regulated investment products. This, in turn, will likely attract increased institutional investment, contributing to greater market stability. Analysts project that there will likely be a big rush into Bitcoin owing to the ease of purchasing spot ETFs. In fact, some estimates call for as much as $150 billion going into these funds 2 to 5 years after they first become available. All this anticipation has helped lead to big gains recently in the price of Bitcoin. Since the beginning of October, the price of Bitcoin has risen nearly 50%. So what's next? Right now, the SEC is weighing 13 applications for spot Bitcoin ETFs, and if an approval of a spot Bitcoin ETF in the US is going to happen, it's going to happen soon. Analysts for Bloomberg predict there's a greater than 90% chance that a spot Bitcoin ETF will be approved by January 10th, 2024.